as an Apple shareholder, what are you hoping to hear today? It's sort of the cat's kind of out of the bag on what we think we're going to get.
Yeah, thank you for having me. I mean, I think this is a company that's always been criticized for not being innovative enough. So it's days like today that are really an opportunity for the company to show their stuff, talk about what's new in the pipeline, talk about how they're, going to have a place at the table in AR, VR, and then also on the AI topic, which Apple has historically had a lot of AI embedded in things like Siri, but now is an opportunity to perhaps, show that there's more to it and that they really are planning to develop more on that front.
Yeah, Josh Brown, Dan Ives, of course, of Wedbush, the analyst who covers Apple, calling this a flex the muscles moment for this company. How about you? What are you expecting today?
I think today is going to be equally interesting, not just for the winner, which will be Apple once again, but for who the losers might be. Keep in mind a couple of things. Intel is down 3% on the day. Why? The headset is most likely to have Apple's very own M2 chip, which will have about 16 gigabytes of memory. The M2 chip is Apple's system on a chip. It combines CPU with GPU. That's what's going to be powering all the compute power behind those 4K displays on either side of the goggle. Very important. The second thing, can you imagine if after all the time and money invested at Meta, that Apple actually comes along and is the first company to introduce something that is the roadmap to a more widespread mainstream virtual reality product, a set of goggles that people actually want to be seen in. This is not expected to be like the watch in 2015, where it's $300, it's entry level. There are rumors about this is it's like a $3,000 headset. The most they expect to sell is 900,000 units in the first year, and then sales will slow. But the basic idea is to just carve out their chunk of territory here, and more importantly, have an ecosystem that third-party developers are willing to spend money and time investing in. It wasn't Oculus, it wasn't Facebook Meta, it might be Apple.
Yeah. Joe Terranova, I mean, I think it's fair to say you learned the hard way what it's like to try and trade this stock, which you were out of, and then as the momentum started to build again in tech, you got back in, and here we are. The stock's at an all-time intraday high today.
Sure, and very happy that we recognized it quickly and returned to the stock, because the stock is about quality. And if you think about the word that's been used so frequently in the last year, it is quality. And quality is outperforming the S&P overall. And this is a company where the fundamentals were never in question, Scott. It was the technicals. These fundamentals for this company, they have over $100 billion in free cash flow generation. Think about that for a second. That's the size of Citigroup or a Goldman Sachs or a BlackRock. So to Josh's point, they have the ability to spend. They have the ability to spend, and what does Apple do so well? Apple is able to retain its customer base in the ecosystem because they always deliver on product improvement. And I would not be surprised to see that, in fact, today. It's not about innovation. It's about their ability to use the balance sheet to improve upon products. And that's my expectation for today.
Yeah, Steph and Jim are interesting stories in and of itself. And the fact that, both of you, I think, are underweight tech relative to the benchmark. Steph, I'll go to you first. The way you see Apple in your portfolio today versus the way you might see it tomorrow, given what Tim Cook may do on that stage in that beautiful building behind us.
Yeah, and I am underweight tech, but I'm a lot less underweight than I was all of last year. I'm only 400 basis points below my bench, which is 35% in tech and comm services. Last year, I was like over 10% underweight. So I've been slowly adding to it. I mean, some of the stories are very compelling, and given the end markets that we talk about all the time. But in terms of Apple, I don't know if my perception is going to change after today. I mean, I think mixed reality headsets are exciting and fun to talk about. So, but short term, I don't think it's going to really have an impact on the financials. Longer term, we know Apple is very good at inventing new markets and new markets. And 3 years from now, the headsets are going to be cheaper, faster, and more uses. So I think This year, analysts are expecting about 200,000 units for these headsets, going to 8 million by 2026. And if they could achieve that, that's about 36 cents a share to earnings. So it's not huge. It's nice, but it's not huge. We'll have to see. IDC is saying that they expect 25 million AR and VR headsets by 2026. So maybe there's even upside to the 8 million for Apple. Who knows? It's so early, though, Scott.